Alright, hello and welcome. Making this quick video to explain a bit about Fibonacci. I've been getting a lot of requests on how to use Fibonacci for Forex. Alright, so here it is. Even for binary, I prefer to do more of Forex on prefer to do more of Fibonacci on Forex than on binary. But here it is. Okay. All right, first of all, use trading view. So you need to go into this third column, pick out this arrow thing, and you'll see fib retracements. You click on it, and you draw your fibs anywhere. We need to set up the settings first. You click on this middle line, then you click on this settings bit, and you go to style, and these are the coordinates that you need. So 0, 38.2, 0.5, 0.618, 0.786, 886, 1. 0.272, 1.414, 1.618, and if you really want you can just go for the 2 second bit as well, or 2.414, and that should be enough. And yeah, so just click OK. One is you can when you do it for the first time in trading view, your labels will be on the left like this. So this is quite messy because it messes up with the price. So you click on labels, you go right, and it will show you and it will keep the labels on the right. Then if you click on levels, it will just show you the levels. If you tick on it, it will show you the levels and the price. So click on the prices and also click on the percents. It is much easier this way. So all these three boxes to be ticked. Then you have labels on the right, and then you can also do at the bottom or in the middle. It doesn't really matter. It's just on the same person on the same line, just the position of these labels. So this background section, it is the color bit. I just keep it blank because it's much easier to view the price. So this is the thing that you gotta do. Oops, let me get rid of this. So this is the basic setting for Fibonacci. Alright, now just for basic introduction, let me show you what fibs are. So fibs are, so some old mathematician, he made this combination of numbers. He said everything in world happens on a proportion, blah blah blah. And he said whenever there is a big move in one direction, it is gonna retrace. As I always say that the price will never just go like this, right? The price will actually go like this and like this and like this and like this. So this is how the price moves, right? It moves in zigs and zags, it moves in ups and downs. So what we do is we use Fibonacci to predict those highs and lows of the particular price leg. So let me give you an example. Let me get rid of all this. Watch on this one. This is going to be very helpful. All right, now I have this chart in front of me, which is called Aussie USD. Now for a very basic scenario, now you see this is let me go on a daily. I'll show you it in a better way. So you see this is one big leg, right? This huge is one big leg. So if I wanna, now this is an uptrend. So anything, if I'm calling it a retracement, that means a retracement of an uptrend will be actually a small downtrend, right? So this is my uptrend. In order to measure the retracement of an uptrend, I'm gonna go from the bottom to the high, wick to wick. You see wick to wick. Now you see where now these are the possible points where I can potentially see that the price will hold off a bit. That's what I can see. For example, you see this one, it gave you a bit of a support at 38.2, then a bit of at 58, then bit of 68, 61.8. So if it continues to go lower, the next support I can probably find is 78.6, 88.6, and then 100% of blah blah blah. So the idea about oops, I shouldn't have moved that. Okay, back here. So the idea is that these are proportions, or you can say these are temporary support and resistance areas that can be used. These are like dynamic support and areas which differ with every leg that you make a move on. Now if I go on a lower time frame, maybe if I go on H4, and I can see, all right, that now if this is a downtrend, right? Now if the price is meant to go all the way up there, so what I can see is I'll just go from top to bottom. and I can say, okay, maybe the price it's gonna hold off from here, and if it holds, it's gonna go all the way up to 38.2%. So that is like that is what can be used as a profit target. Or what you can say is that if this 38.2% holds, if there has to be a change of trend, the 38.2% is going to hold and the price is going to go this, and this is where I can hit my profit target, and it might come back, then it might go this, and then it might go this and this and this. So again, this is what can be treated as your profit target. Now for example, now this also confluences with your a good resistance zone. For example, over here and over here, you see it's a zone being held. So what I'm gonna do, I'm just gonna draw my stuff in there. So you see this is a good zone where the price can lay off. So if this has to be a reversal, now I'm not gonna explain whether to determine how this is going to be a reversal or not. That's a completely different and a much detailed approach. So this is how you can use Fibonacci. You can use Fibonacci for your profit targets, or you can use Fibonacci for trend continuations and whatnot. The How do I determine trend continuations is and the most important key factor is one is the Fibonacci's can be used as a harmonic pattern. If you bring out, if I let me bring out my fibs, my harmonic pattern stuff. So something like this. Uh, so you see, it's just a free guide I found on the web, and you can just download it from anywhere. Or you see, these are the major harmonic patterns. Now you see, these harmonic patterns are actually a combination of Fibonacci's. Again, it can be found out either way. For example, this from the even just from the looks of it, I can see that this is a harmonic pattern. For example, I can just go from there to there. I'm just measuring this leg. Now this was a downtrend, the retracement will be an uptrend, right? So if I go, if see, it held my 50%. So I can go on my triangle tool, I can draw on my fibs. So you see around 50, even around, even almost touched my 61.8 as well. I'm just gonna keep it on the wick, and I'm gonna get rid of this one. And you see the next one will be around 100, 1.27 ish. That's all we need for the next move, or not, around 100 ish, or something between 100 and 100 to 107. So that validates our pattern. And the next leg, if I'm gonna need, is going to be, say, up to 88.6, because that is where the reversal is gonna happen. And see my bottom, top to high, and click on this bit. Now you see it perfectly completes your harmonic pattern, and the price moves right on the dime. Now it also gives me a confluence that the price, it is laying on with my previous high. I'm not gonna go in details of this indicator over here. I don't use it for binary or anything. I use it for Forex, or I use this, or I use RSI. So both are very different in ways of use. But if you see it, it gave you a very good idea that the price can be held off from here. Now, if you go on your measurement tool, you will see that it is a good 82 pip move. Not a bad thing, but 82 pips is not that great, but not bad. Not bad for a few hours. So this is one good deal. How to use fibs. One is you can use the fibs. Let me actually write it out for you. Bring in my text tool. So one is you can use fibs for calculating retracements. Alright, the next bit you can use it is for, oops, harmonics. And the next bit you can use it is for even trend continuation. Again, it depends. It depends. Fibonacci on itself means nothing. It's just a dumb set of numbers. It depends on how you use it. Just in the same way, support, resistance, and trend lines on themselves, they mean nothing. They're just lines. I mean, they keep breaking out every now and then. And then the most important bit is how you use them. So as we explain in as we explained in our previous as we explained in our previous group training, that I teach you guys how to use these support and resistances. We try to determine which one is going to break and which one is not going to break. So this is how you use fibs. Let me give you another example of one more thing I want to explain is what those numbers are, which are some are on the plus side, some are on the minus side. All right. Now, for example, if this was my move, for example, if this was my move, right, bottom to high, so I'm going for example, this one was my leg. Okay, this one. So now you see this leg, it's an uptrend. Right now I want to move its retracement. So this is an uptrend, so its retracement will be in the downtrend, right? Because that is why it is called retracement. It is retracing to its original path. What was the original path? The original path was this leg. So the next leg will be this, or maybe it might be this, or it might be this. So these are the retracements. So we can so what we use fibs is for to measure those retracements. All right. So anything up to 100%, it's still a retracement, right? When it touches your 100%, then you can say, okay, now it's leveled out, because anything from 0% to 100% is a retracement. But if it goes beyond the zero, beyond the 100%, now what are these bits called? These bits are called extensions. Just as the name suggests, it's just very simple English. Extensions and retracements. Let me type out my retracements as well. Retracements. See, so anything between for anything between 0% to 100% is retracements. So anything above 100% is going to be extensions. Very simple, very easy stuff. So again, Fibonacci on itself means nothing. How you use it depends on whether to trust Fibonacci or not. So again, don't try to get that holy grail stuff over every time it's gonna bounce off 61.8, blah blah blah, all that crap. It doesn't work that way. It's never if you just had to consider that it's gonna bounce off at 61.8, no one would ever go broke. Again, see, it perfectly broke your 61.8, but it did hold your 78.6. So again, just fibs on themselves mean nothing. They are just meant to be confluence. How else you can use Fibonacci for binary? Let me get rid of my indicator. Um, for example, now you see this is a big leg. So what I'm gonna do, I'm going to have a trend continuation trade. So you see bottom to top to low, because it's a downtrend. So I'm gonna go from up to down, and I'm going to measure the retracement. Now you see this is the retracement that comes into play. So now where is my resistance? Where is my previous resistance? My previous resistance is over there where my blue line is. So what I can do is I can jump on my higher time frames and see if this is a valid resistance. Now over here I see that, okay, yes, this is a valid resistance, held over here, held over here. In fact, it's a bit of a zone. So other than just considering it as one line, I'll rather be treating it as a zone. So you see this is a zone. The price was being nicely held. Send to back. Okay, so the price was being nicely held, and the price broke with a big ass candle. When the price came up, it almost retested the same stuff, and that's when it pulled back. So again, as I said, it's all about how you use Fibonacci. Now I can also see that the price almost came back into my zone, also hitting 61.8. And so this is where I can say, okay, I will be happy to continue to the downside, and I can be happy if it continues to the downside over there as well. So again, it depends on how you use Fibonacci. It's just I cannot repeat this enough, but just fibs on themselves are just a rubbish bunch of numbers. But it's how you use it, it becomes more valuable. So never trade like oh, it's at 61.8, I'm gonna trade it. Oh, it's at 38.2, I'm gonna trade it. Nope, it doesn't work that way. It never works just like that. Price action is the key. Price action is the master. Everything else is just an additional confirmation. For example, now you see if this one is over here. Now again, I wouldn't have this trend line without this point anyways. So what else I can do is I can jump lower. I can in fact bring in more data. I can jump on a higher time frame, and I can see if any of these fits my criteria, right? So wick to wick. Now I don't have anything here. Then next wick to wick, this one comes into play. So what I can do now, this is a big as leg. So again, I can do this, I can do this. I'm trying to have this point. So my bottom comes in over here. Now 38.2, I don't know if this is actually gonna hold or not. But what I can see is that one is that it is holding a trend line on here. Second thing is that it is also holding my resistance zone. Now you see this was held over here, held over here, so it's a good zone. It's been bounced off recently. So once a support zone, sorry, not resistance, support zone. So once a support zone breaks, it becomes a resistance. So simple. Big candle to break, that makes sure that yes, it was a good support. Then it breaks to the downside, comes back, retest, comes back, retest, holds the trend line, falls down perfectly. So again, fibs just to be used as an additional confirmation. There's nothing too fancy about fibs, so don't stress over it too much. Just use it as everything else we use. We never take a trade just based on one confirmation. We always trade based on multiple confluences. So don't give up, and just work your bums off. Study, 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 study. The more you study, the easier it's going to become. So this was a very quick video about Fibonacci. So keep it simple, and I'm sure everything will fall in place. And I'll see you guys in the next session. Till then, good luck, happy trading, trade the plan, plan the trade, and bye for now.